Today I want to show you a super simple strategy that we can use on Bitcoin or on any cryptocurrencies to make some good profits in the market with having a lot of hustle. For this strategy, we're only going to need 3 moving average that I'm going to explain now how they work. If we come to the settings, we can see the first one of 48. This represents the last 4 hours of the price. The one of 288, that represents the last day of trading. And then the 2016 represents the last week. Okay, so we've got 2 moving average for the direction. That will be 288 and 2016. And then the 48 moving average, we're going to use it for the pullback so we can enter the market. But I must mention as well that this strategy works best when we are on a trend. If we are on a low momentum, we're probably going to be sideways and it's not going to work as well. Okay, so first of all, we need to find something like this, okay, that the 288 and the 2016 are well spread out, so we've got like a nice trend. And then is when we're going to use the moving average of 48 to start looking for these pullbacks, as we can see here. Okay, so if we go a bit deeper in, we can see here we still wouldn't be trading this because they are still too close together, and obviously what we want is it to be spread out more or less like this, so we can start entering the trade. So if we go a bit deeper in, we can see how the price continuously pulls back to the red moving average, that is the 48. So what we're going to do now is enter the pullbacks when the trade is valid. When is it invalid? When things like this happen. We can see how the price pulled back in, but the red moving average crossed the green moving average, meaning that the 4 hour is going above the daily, and obviously we don't want this because it goes against our weekly moving average. So the only thing what we've got to do is wait for price to come back down. If it does, and as we can see here, it came down more or less when the price was down here. We're not interested in buying at this price anymore because obviously it's gone already too low, so we just wait for another pullback to happen. As we can see, it happened here, and when price went below, we'll be entering the market, okay, with putting a stop loss above the weekly, so it's nicely secured, and the take profit is going to be at a risk reward of 1 to 1. As we can see, when price fell down here, it went right back down. But obviously one of the problems of this strategy is that sometimes price goes too far away from the weekly moving average, and this was causes a too big stop loss. So as we can see, we can use it when price is more or less near, but when price goes far along down, and we can see here there's quite a distance from here to here, we can then use the daily moving average when we can see that these two are spread nicely out. When they've spread out, then we can use that moving average to be able to use as a stop loss, and that way we'll get quicker profits as well, because we don't have to go so far down to actually get our take profits. And as we can see here, we got multiple entries and all went successfully to the take profit. And really this is most of the strategy, because we just have to rinse and repeat. Obviously having experience with the strategy will always make it easier, but we can see that when we got a nice trend, it will work perfectly without no problem. We can see how it happened with all this downtrend. But obviously the handicap is that we need to have a good trend for this to work out, otherwise it won't work out. Another thing to add on, that we can do trailing stop if price takes a bit long to actually hit our take profit. We can trail our stop loss down until it actually hits the take profit. In this case, we would have traded it from up here down to here for when it's already hit, just in case we get some type of reverse and the price comes back to our stop loss. That obviously we don't want that. As you can see, in all the downtrend, we caught virtually all the trades with no problem at all. This one, we can see how the price nearly didn't get our take profit. It just hit 1 to 1. And as well, last thing that I must mention is that we hit any stop loss, then we've got to wait for the price to actually get another trend, because if we hit a stop loss, probably price will start moving back up again, maybe to touch this weekly moving average and then continue down. But obviously we don't want to be exposed to the market while this is happening. So as we can see probably here, the price hit stop loss when we entered in this position around here. It barely just touched the stop loss and went back down, but obviously it hit stop loss, and here's we've got to wait for price to expand back down again to then be able to enter the market at this point here again. Okay, so we'll be entering more or less here, stop loss even a bit shorter, and we will hit another take profit here. And as you can see, in all this downtrend, we would have caught quite a lot of trades, more or less in 2 days of trading. We would have caught quite a lot of take profits, but what we must avoid is this type of market. Okay, if we see the market moving like this is a big no-no, because obviously we're going to get a lot of false entries because there isn't any trend, and this is probably going to start forming some accumulation until it starts going to one direction again. So I hope you've enjoyed this video. I hope you've learned a bit more, and I'll see you next time.